Hey everyone, welcome back to the Market Chat. My name is Richard, and joining us today as our guest is Jay Oliveira, also known as Plant-Based Athlete on Twitter, and he is a stock speculator and trader. Jay, thanks so much for being here. Welcome to the show.
Thanks so much for having me, Richard. I'm honored and very humble. I'm purposely not even watching your recent videos because you have some of these amazing traders on that have been just crushing it for years. So I don't know why you want me, but hopefully I've been, studying charts and doing this a long time. Hopefully we can get out some tidbits for some newer traders and maybe get in some topics that haven't been discussed on some of the other interviews you've done. But love your show, man. It's amazing.
Thank you. And you're definitely one of my favorite follows on Twitter. I think I just followed you either earlier this year or late last year, but I like how you keep it real and all of that. So
yeah, I just got on actually, probably not too long after you followed me. Yeah, and I've just been kind of sharing my process.
Yeah.
Kind of like my own journal. This is my passion. I'm very I'm very OCD introvert, and I have like a couple things in my life I love, and I get really into it. And fortunately, I'm able to trade mostly full time now. This is my passion. This is what I love to do. So I love sharing it and I love talking about it because nobody in my personal life trades stocks really. So
yeah, well, I'm happy to have this conversation with you. And to get started, could we learn a little bit more about kind of your background, how you developed as a trader, where you kind of learned from, books, resources, all of that?
Sure. So I grew up on a dirt road, man. Like my mom was divorced when I was in third grade. My brother and I, just us, never came from money. She waitressed 2 jobs until she got a job in the school system. So never knew anything about money, how to handle it, anything that came in, I blew the money right away. My brother was like the first person in my family to go to college and graduate. So
nice.
I played a bunch of sports growing up, lettered in 3 sports in high school, played rugby in college, lifted weights, got into Jiu Jitsu in 2009. That's my other passion in life. So I think, being an athlete really helps in trading.
Right.
Anyway, so broke all my life. Like I said, I got out of college, got into real debt, and I came home probably back to Cape Cod after traveling and working in a few places after college, like in maybe 98, and worked my ass off, like 2 jobs to pay off some debt. And I realized, wow, you can actually save money. So I wanted to start investing. I knew a guy who was a broker, an older guy, so I gave him a little money. And then I came across an advertisement for Investors Business Daily, watching like CNBC. So I ordered the newspaper. Shortly after, I ordered the book.
Mm-hmm.
And then I just became obsessed. And I didn't have much money to trade, though. So stupidly, I thought getting a job in finance would help. And I thought I would make all this money and, could eventually do what I really wanted to do someday, was to trade my own money.
Right.
And now, full circle, 20 something years later, I'm here on a very roundabout path to get there. But anyway, so I was trading in 98, loved it, made a zillion mistakes, lost money, made money. And then I got a job through my buddy as a stockbroker in New York City. I mean, back in the crazy times, like 99, 2000. And I really couldn't trade at that time, but I was always studying it. I was pitching stocks based on CANSLIM when I would cold call. Right. I think I was pitching back in 2000. If anyone's watching this who knows, I was pitching like Checkpoint software. They had all these great fundamentals at the time. And so I was always involved in it. And then I was fortunate enough to see the top live. I wasn't working down on Wall Street, but I was working Midtown, a few blocks from Grand Central, on the 40th floor. Clearest day ever, saw the second plane hit. That was a little bit of wake up call in life. I really hated being a stockbroker. I just wanted to trade my own money. Just didn't have money to trade it. And going into New York, any money I had, it's an expensive city. You don't make anything when you start. Back in the day, I think I made 24 grand a year to start as a broker. And I did that for a few years. And then in the summer of 2002, I was just miserable. I mean, we're in a bear market.
Right.
Hated cold calling. Just wasn't my thing. I quit. And about 6 months later, I moved to Hawaii. I had a college friend out there stationed in the military. So I got a job out there selling wine. I was a sales rep, outside sales rep. And the market was always on my mind, you know. So when I started to make some money, I started trading again. I think I got in after, you know, 03, 04. I did okay. I remember trading some names with some pretty good success back then. I remember, like, you know, I think it was 06, dry ships. It was That's funny because it comes full circle with the shippers. Crocs. So it's pretty interesting to see stuff come full circle. But then it was very difficult to trade in a time zone different. I mean, it opened at like 3 a.m. out there.
Yeah.
Trying to work a full-time job. I was in a relationship, so it just wasn't working. And I started to get away from it. And I just said, you know what? I'm going to focus on other stuff right now. And so I just started, instead of trading my own money, I just maxed out my 401k, and I did that for like 12 years. I don't regret it. That was a huge decision. So anyone watching this that's younger, you know, I recommend, I mean, I'm really a minimalist at heart here, and I keep my expenses low. I do this because I love it, and not for flash or to spend money or whatever. So I recommend anyone watching this that's getting into trading to pay off all your debt first, start a retirement, and then get into trading. So it takes away a lot of the stress. So I did that, you know, I maxed out that for 12, 13 years. Did a little bit of trading here and there, but then we had the 07, 08 crash, and my income dropped 50%. I was in a tourist area. So then I couldn't trade. I didn't have any money. So then I ended up, I always kept my mind in it though. You know, this book is like, it's my Bible, you know. I'm just a real numbers guy. I like looking at charts. They fascinate me. So I always kind of read a bunch of books. I probably read 10 or 15 trading books over and over, this being the main one. So then I started a business with an ex-girlfriend, and I sold that 3 years ago to her. I've been kind of full-time ever since, you know, a couple of years now. And yeah, it's funny how all the stuff from years of incorporating, it's like riding a bike, come back and I remember things. And I think this is really important. And I hope some of you listen to this. If you're younger, sometimes you're just not emotionally ready to be a trader. That's why I'm so impressed by you, the way you are, because when I was your age, I had this like gambling mindset. I'd go too heavy. I do well, then I'd blow up my account. So I think taking a break was the best thing I could do for me. The knowledge was always there, but now that I'm more mature, losing money is more important to me than making it. So risk management is huge for me. So yeah, I've been trading the last few years. It's been going well. And yeah, I love it. So I just started sharing my process on Twitter probably 6 to 10 months ago, I think, maybe.
Yeah, for sure. And outside of how to make money in stocks by O'Neill, what were the other kind of top books that you've read over and over and over again?
Jesse Livermore, obviously, Reminiscence of a Stock Operator, How to Trade in Stocks. I got some books over there. Monster Stocks by John Boik. I've read Gerald Loeb's books. I read The Perfect Stock, talking about Taser back in the day. That was an interesting book. And the last few years, I've really delved into Trade Like a O'Neill Disciple by Gilmore and Kacher. So those two books had a big influence on me coming back, because I really started to develop different entry points and different strategies. So I would say that I'm CANSLIM with a little bit of Gilmore's OWL method in there, which is O'Neill, Wyckoff, and Livermore, I think. So a little bit of that style. So yeah. So before I forget, what I want to say about this book is I'm always talking about it on Twitter. And I want people to understand, you got to develop your own strategy. This is the Bible. This is how you learn about the market. And it's not so much about cup and handles and buying pivots and all that. It's more about how the actual market works. And that's what I want people to get out of this book, is how the market actually works. There's so much knowledge in this book that if you read it over and over and over, they say you have to read something 10 to 15 times to grasp it, you know? So if you read this over and over and over, you'll develop the concepts on how the market works, and you'll start to see things after years and years of, you know, reading this and trading and implementing it. And then you can kind of develop your own style. But this is the Bible. And then now I've incorporated other stuff into it. For me, taking a 7 to 8% loss would just wipe me out if I kept doing that over and over. So a lot of people read this and they take it literally, and they see a cup with handle breakout. They don't have the understanding of what a healthy chart looks like, because there's times to buy breakouts, there's times to not buy breakouts. So I just want to say this to my followers on Twitter. This is the Bible, but you got to develop your own strategy over time that works for you, you know. But the book is amazing. I think February 26th, I went cash. And the reason, and that's when everyone was just buying dips. But this book just sunk into me over 20 years was when you see the leaders of the market break the 10-week moving average on volume, that's a massive warning sign. So in February 26th, if you saw 4 or 5 true market leaders broke the 10-week on volume, Zoom had done it and DocuSign had done it a few months earlier. So it was like, that's why the book is so valuable. It's not about a cup with handle, you know, or a double bottom. It's about understanding how the market works and using that psychology. So, yeah,
I completely agree. I kind of view it as like the foundation that a lot of traders have gone off and adapted their own styles, their own buy points, their own methods. But it all comes back to what O'Neill talks about, and the concepts are there within that book all over.
Yeah, I mean, he's a genius, just so far ahead of his time, you know. But you have to develop a strategy that works for you. I have nothing against long-term investors. For my psyche, I can't sit with a loss. I can't even sit with a loss that's down 2-3%, let alone I can't go through a drawdown for 3 months, 4 months where stock basis. It's just not in my psyche. And I think that's really important for people listening to understand. You got to know yourself, you know, your strengths, your weaknesses, what works for you. And for me, it's swing trading. I'll sit with a stock if it's acting great, but I rarely hold anything that breaks the 21-day moving average. And every stock has a personality. And so like DocuSign last year, I traded it from like 100 to 140-ish, 145. And it was you know, using the trade like O'Neill disciple rules, it held the 10-day moving average for 7+ weeks. So for me, when it broke the 10-day, I sold obviously too early. I do that a lot, but we're not in the market to pick bottoms and tops. We're in the market to make money and develop a system. So my system is a little different than CANSLIM now, but it's just adapted over time. Yeah,
for sure. And one of my favorite things to talk about is kind of process with everybody who I interview. So could you talk about a little bit what's kind of your weekly routine to go out, analyze the market, find ideas, and basically set up a plan? Jim Ropel calls it the ride the wave plan. And also on a daily basis, you can talk about that later. How do you pick the few names to focus on that particular day and make sure that you're able to execute properly?
Okay, so I'm a big proponent of MarketSmith. I don't get paid by them, but that's how I get everything. I just think it's really simple. And if you're newer, you might not be able to afford the $150 a month, but for me, it just puts everything into space there. And their growth 250 is amazing. So for my process on the weekend, what I'll do is I'll go into the growth 250. I set a couple personal screens, but mainly I'll go into the growth 250. And if I followed those names a while, they have separate tabs. One of them is new additions. So every weekend I'll go through the new additions to the growth 250 and go through that. I'll go through RS at new high. I'll go through that. Stuff like that. I'll go through screens with big earnings growth. So I trade technicals 100%, but I rarely trade stocks that don't have either explosive revenue or explosive earnings. So I find that the more entry points that tie together within a stock, the more I'm a huge proponent of accelerating revenue and accelerating earnings. So I look for stuff like that. So if they all kind of pop together, then I get excited and I'll start to, put it on a focus list. So what I do is I have a screen of names that's more like my watch list.
Yeah.
And then I'll narrow that down into a focus list of, say, 10 names.
Mm-hmm.
And I typically tend to go fairly concentrated. So I might only own 4 to 8 to 10 stocks at most in a nice uptrend. This year has been difficult to get to 8.
Yeah.
So, you'll start, and I'm learning, you get spoiled by a market like last year. But I'm learning, to slowly build and build and build and build. But that's my process. And then every day on my phone, I got my Market Smith app on here, and I'm just screening charts all day long, all day long, all day long. On the weekends, I love to look at weekly charts and then narrow it down to the daily from there. So that's kind of my process.
And during the day, are you setting alerts? How do you keep track of stocks as they get close to a potential buy point?
I stare at the market all day. And I know it's for some people that doesn't work.
Yeah.
They overtrade. But for me, it really works in the sense that if I'm following like 10 stocks, like stalking them, I really get to see how they trade. And I think that's important because every stock develops a character, and that's why I think a lot of people, they'll follow me or someone else, and I'll put out my focus list, or I'll post, such and such is breaking out, and they'll just buy it, without doing any research, without watching it. I like to watch a stock for, days before I buy it a lot of times and see how character is, because a lot of times if the stock breaks its character, you can get out without taking a loss or without giving back a ton, so
right.
I watch stocks all day long, and then I do set buy stops on specific stocks. So what I'll do is like INMD today. What's the date today?
It's the 7th, I believe.
7th,
June
yeah.
7th.
So it's Monday the 7th. I don't know when you'll share this video, but INMD broke out today. And I saw that it was I already owned a position, and I'll get into that, how I bought that later. I'll go into my current names. But I saw that I had a buy stop in for 87.10 for an ad, but I saw that it was going to gap up, so I pulled it.
Right.
I don't like to buy. Typically, I don't like to buy morning gap ups. I like for it to move through. And I could have probably added after the first 5 minutes. It pulled back close, but I didn't. Probably a mistake. But I have a really good cost, so I'm fine with it. But I will have buy stops, and that's what I did with Roblox. How do you say it? Whatever.
Yeah.
I had a buy stop in for that, and thank God, because once it hit it,
it just went
ripped.
right.
It just ripped. So a lot of people don't like to do. I hear this a lot from new traders. They always say, when I post a stock, they go, "Don't you want to wait for volume and volume and volume?" No, I follow price first and then volume. So I don't want to miss my entry, because if you look at, we'll get into Roblox later, but if you look at the way Roblox broke out, it was perfect for me, because then once it ripped, I can put a stop at the low of the day, and I think I was going to risk like less than $1 at that point.
Right.
So I do buy stops, but it depends where the chart is, because I'm always managing risk, and I don't, if a stock, pulls down in the morning and I miss it and then it breaks out, but it's like a 5%
intraday swing. Yeah.
Intraday swing, I'll probably pass on it until a better setup, because I don't know how to manage risk with that big of a loss. So that's why I tend to have like 3 or 4 different ways I buy stocks. I buy undercut and rallies. I buy pullbacks to either the 10-day EMA or the 21-day EMA, or I buy breakouts in the right environment. So
yeah. And speaking of those intraday swings, I mean, UPST has been a really powerful stock, but I mean, it's got 10% ranges every day, pretty much.
I've done terrible. I mean, full disclosure, I've done terrible with that stock this year. I tried to trade it remember that earnings gap up a few months ago, and it ripped.
Yeah.
And it tried to pull back. I bought it there, and I just got crushed on that one. Bigger loss than I would have liked. And I tried it a few other times. I tried it last week, And, you know, some stocks in my personality just don't get along. It's a monster stock, but for me, tighten up and or get a really good risk, you know. For that stock's nuts, man.
Yeah, for sure.
Yeah.
And I always think it's interesting to hear about people's like statistics. So if you kind of know it offhand, what's kind of your average batting average, your average gain, your average loss, holding periods, all that type of thing?
Not great. You know, I probably only bat, you know, 40%, but I take extremely small losses, you know.
Right.
I might be 35, 40%, but I take extremely small losses. So if my average loss is 1.5%, which is really stretching it, a lot of times it's less than that, you know, I get a 5% move and I'm making 5-to-1 profit to loss, you know. So yeah, I don't bat great. I make mistakes all the time, but the one thing that's changed with me over time is I don't let a mistake turn into a disaster, you know.
Right.
I think that's the mistake a lot of new traders make. I made it all the time, is putting good money after bad, getting emotionally attached to stocks, and just not being able to cut a loss quickly. I'll rebuy the same stock. FUTU, I think I took about 8 losses on that stock, and then 1 to 2% losses. So I think I ended up losing about 10%.
Yeah.
Which is a lot for me, but it was over like 6 to 8 trades. And then I made 105% in a couple weeks. So I more than made up for it, you know? So yeah, I'll just manage risk. And it's not for everybody, you know? Because a lot of times you get shaken out and then the stock rips and you miss it. But I've gotten to the point now where I don't have any emotional attachments to any companies anymore. You learn after taking beatings that there's always another stock setting up, and that same stock will likely set up in the future. So yeah, if I can't manage risk, I won't take the trade, no matter how great it's going. Even if I know it's going higher, I gotta wait for a good entry for me to manage my risk.
Yeah, same here. And getting back a little bit to your background, I know from your profile, obviously plant-based athlete, and you posted on jiu-jitsu a little bit. How do you think that, do you think that helps you with your trading when it comes to discipline and mindset?
Jiu-jitsu
and all that?
100% helped me with everything in my life. It changed my life. I grew up on the East Coast, used to be a real negative person, real angry, and it really chilled me out. Maybe that's because I can get out my frustration by choking people out or whatever. But no, jiu-jitsu teaches you to be comfortable in uncomfortable situations. And I think that's so important in life in general.
Yeah.
Because ever since a complete mindset on life's changed, everything's changed. I don't sweat the small stuff at all. I'm rarely upset. I'm rarely like an emotional roller coaster anymore. And I would say a lot of that is jiu-jitsu, you know, for sure. So sports in general, but jiu-jitsu was my first individual sport, martial art. I compete. So it's a martial art, it's self-defense, but it's also a sport where you enter tournaments and compete. So being able to put myself on the line and go against another guy, you know, it just does wonders for other aspects of your life. So for trading, I think it's been massively important for me in my trading, because my emotion is just the same, you know. Oops, I'm down fucking X amount today, whatever, you know. Whereas in the past it was just like controlled, you know. So, yeah, for sure. Highly recommend it.
Yeah, it's funny because like a couple people I've interviewed have done jiu-jitsu, like Jack, Jessica, and now you're the third. So yeah, I've been thinking of trying it at least. So for sure.
Yeah, people get hung up on like I don't know what I'm doing. But every single person that started jiu-jitsu didn't know what they were doing, you know. And you learn, just like the stock market. So that's another thing. Things become in jiu-jitsu, when you first learn jiu-jitsu, right? You learn a move or a technique, and it's almost robotic, and you don't know how to link things together. You don't know how to put the whole process together. You learn one move. So when you start trading, oh, I learned a cup with handle, and that's all you see. You don't understand the volume going on. You don't understand the other stocks in the group, how they're acting. You don't understand what the overall market's doing. You're just singularly focused on, oh, it's a cup with handle, even though it could be flawed as hell, be, corrected 50, 60%. All you see is a cup with handle and you buy it. Whereas in jiu-jitsu, the longer you do jiu-jitsu, the more everything becomes instinctual. Like, I'm just transitioning to things without even realizing I'm transitioning to things. I'll watch a video of myself roll. I'm like, how'd I do that? I didn't even know I did that. I don't even remember doing it. And I think that's the only thing that's going to get you to that point in jiu-jitsu and in trading is time.
Yeah.
And we live in an instant gratification society where you want to have everything immediately. You want to get, that's how I was when I started trading. I wanted to turn 10 grand into $1 million in a year. It just wasn't going to happen. Instead, I lost the 10 grand because I got impatient and I didn't have patience, And if you look at this year in the market, a lot of people gave back huge gains from 2020 because they couldn't be patient. They couldn't just sit back and observe. They wanted to always trade and trade and trade. And then those losses add up and they kill you.
For sure. And speaking kind of different market conditions and kind of waiting for your pitch and waiting for the market to be right, how do you basically determine whether you should be stepping on the gas, holding off, or just completely out of the market in general?
In the past, it was always the market, but it's so skewed to, some of these mega cap techs now that there's a lot of underlying things to observe now. So for me, it's always stocks first, market second. If the market's going down and down and down, eventually, of course, they're going to take stocks with it. But last week, this is a perfect example. A week and 10 days ago on Friday, right? A lot of people went to cash. Because the NASDAQ broke the 50-day moving average. It looked ugly. But my stocks, I watched my stocks first. I think 3 of the 5 names were up that day. The other 2 of the 5 names early in the day, 4 were up. But when it got ugly, I think 2 of the 5 were up. The other 3 put in inside days. And I'm like, I have no reason to sell these stocks. These stocks are telling me they're acting fine. And sure enough, we had a gap and go that Tuesday and just ripped last week. So, I watched the stocks first and the market second. A lot of times it's all together, But I started to see a lot of underlying strength in the last few weeks, started to see breakouts working, started to see some of the older names. I don't think they're leading this market. I don't want anything to do with a lot of them. But they were able to get back above the 200-day or 50-day holding. So all that stuff's telling me, the market's getting healthier. And also, I'm very contrarian, and you're starting to see a lot of negativity. Whereas in March and April, the egos, man, on Twitter was a great way to see human psychology on display. People just buying the dip. This time around, they're scared to buy the dip. They don't believe it. They're negative. The NAM dropped, all the way down to 44 a few weeks ago, where it was up at 100 for So I look at a lot of things, and again, you got to be patient and you got to put in the work, because you're never going to know all this stuff. It just becomes osmosis over time. So what I want people to get out of this, interview is that it takes fucking work. Like, people see, like, the 2020 was the worst thing that could have happened to probably a lot of people, because they saw instant success, and then now they think that's how it works. It doesn't work that way at all. So I'm humbled to be interviewed by you, but I also have the confidence to know that, I'm all day long, I'm screening stocks, I'm reading about, looking at charts, I'm watching the indices, I'm reading books, I'm following other traders I admire, what they're doing, picking up things, like you have Oliver on the show, right? And he's amazing. Like, I picked up so much stuff from him last year, and we talk privately about stuff. So I think the problem a lot of people have is they want to talk to their friends about stocks, and their friends don't know shit about stocks. So they're all buying like these junk names, you know, like, and crypto is a perfect example in the last year. So I think it's very important to understand that you have to develop your own strategy. This is your money. You know, it doesn't grow on trees. You got to work for it. So be very careful who you listen to, and only listen to people that have the success or have the style, because there's many people with huge success that are buy and hold investors, but I can't do it. I can't.
Right.
The way they can sit with a 30% drawdown in a stock, I just can't do it, you know? So find traders who have success that you have and are similar to your style, you know? And I think that's important. So I keep my focus into only, you know, I only talk stocks with a few other people. I don't really care what anyone else is doing. I've developed the confidence in my trading to know that I know what I'm doing. I have my own system, my own process, and it doesn't even matter. Sometimes great traders, like Ollie and other guys I talk to, they might not even like a stock I buy, but you know, you got to have the conviction in your names. And if you're wrong, you manage risk and you get out with a small loss. So yeah, you got to build your own process over time. And a lot of people want things right away, and that's not how it works. There's a video I posted, I don't know if you saw it, from my professor in Jiu Jitsu, and I thought the video was so powerful, and that's why I shared it, where he talked about, you know, loving the process, loving the grind. Gary V talks about it too, the grind, the clouds, right, and the dirt. And so Gary V says, you know, if you don't love the dirt, you're never going to get to the clouds. And my professor, you know, in that video I shared, said a lot of the same things. It's like, you got to love the process of what you do, because you're going to go through shitty times, you know, whether that's in jiu-jitsu or life or trading. And if you don't love the grind and the process, I think it's important. So a lot of people, I don't think they love the grind. They don't love the process. I think you're honestly better off just buying a really good mutual fund or ETF and adding to it every 2 weeks for the rest of your life, because you have to love what you do, because this is like one of the toughest relationships you can have is trading. You'll be in love and then you'll just hate it. You know,
right,
you'll just be, it'll break your heart over and over and over again. So if you don't love the process of trading, and if you don't love the work that goes into it, if
right,
you're just on Twitter looking for buy, I get messages, what do you like? I just, come on. And you got to do the work. And you see some of these traders you're interviewed, I don't know if a lot of them, you know, you get into their process, but the amount of work these people did to get to where they are, I don't think people understand it. You know, if you added up all the time I spend in a day on the stock market, it's probably 10 to 15 hours a day. I'm watching the market all day. I'm screening at night. I'm looking at charts all the time because I love it. It's not work to me. I want to stress that to people. It's like, if you don't love it, just buy an index fund and just add to it over time, and you'll get wealthy, you know. You may not get as wealthy, but you won't go broke like you can with trading, you know. So yeah, gotta love the process.
Yeah, I 100% agree. And yeah, just talking about the experience, I mean, some of the guys like Matt Caruso, they've been doing this it might seem easy and simple now, but that's because they've already put in the work, put in the study, the research, all of that, and now they just know their stuff so well, and they have everything down.
I have a lot of respect for Matt too.
Yeah.
I was just talking to him in the DMs on Twitter today about a couple names. So yeah, I only talk to 3 or 4 people about the market, and that's it. I keep my universe very small, and my universe of people have the same style as me. They cut losses quickly.
Right.
And they're objective. If I say I like a stock and they say they don't like it, you know, I can look at that and like see both sides of the trade, you know. So it's important to have people like Matt and Oliver in your life, and people like that. Yeah, he's amazing.
Yeah, for sure. And just in general, when it comes to social media and Twitter especially, what are your kind of recommendations for people to kind of weed out as much noise as possible?
It's hard.
Yeah.
You got to understand that most people are full of shit. I've been around a long time. You know, I just turned 48. I've been in sales my whole life. I worked on Wall Street around some shady people. I live in Miami. There's a lot of shady people down there. You got to understand that most people are full of shit, and you can't care what they're doing. You got to follow your own process and make Ollie says this all the time, make it your own. So if I share a stock, you got to make that your own. If I'm already in it and up 8%, you can't just, he's in it. No, you don't understand where I bought the stock, you know? I'm now going to get out with a profit. And if this turns, you're going to turn it into a loss. So you got to just, you know, there's going to be people that resonate with you. I recommend keep your universe very small. Know your own self. I think that's hugely important. Know who you are, and then follow people with the success who have the same style as you. Because if you follow, you know, there's some great long-term investors. If you follow them, but you're you want to be a trader, it just doesn't make sense to sit with a drawdown of 30-40%. Here's he's up 300%, and he's telling, don't sell, don't sell. But you might have bought it a month ago, and now you've turned a 20% profit into a loss because someone who has a cost basis 100 points lower than you is like, so you have to understand where they are in the process of these stocks, you know. A lot of the people sitting through these corrections on 2020 leaders, a lot of them bought them in March 2000.
Right.
You know, they're up, they're still up even after all this. They're still up a couple 100% on some of these names. So you have to understand who you're following, where they are in their process, what their style is, and really narrow it down. I follow only about 200 people, and I do follow people that don't have the same as me. But you know what? I found some incredible stocks from people that don't have my style, but I always make it my own. If they see a name I like, then I go into MarketSmith, then I do the research, then I start going on my Thinkorswim and drawing trend lines, and then I start to watch it, and then I start to see how it trades, and I make it my own. You know, I don't even remember who gives me these names. You know, and I think a lot of people just follow someone, and because they're in a stock, oh, they have to own the stock. It's not how it works. You got their own process.
Yeah, I completely agree. I think Mark Minervini says this a lot, no audibles. So especially during the day on Twitter, just because somebody says this thing's breaking out, if you aren't ready, if you don't have a plan, you don't have a plan to manage your risk and keep those losses small, you should not take that trade. The day before on the weekend, that's when you should be really putting in the work and making a plan out for the week. So you're ready when stuff actually starts to move.
Yeah. The first thing I look at when I'm about to buy a stock is, where am I going to get out of the stock?
Right.
So if you're following someone on Twitter and you see that they bought a stock and it's already up 4%, you just buy it, and it was down 3% in the morning. Now you're already down. Where's your exit strategy? If it's trading above the 10-day moving average and it's 7% down for the low of the day, you didn't have a plan, you know? So you got to really have a plan in place. Every time I buy a stock, I know exactly where I'm going to sell it. And if it's not acting how, I think Mike Webster talked about this when he used to talk on IBD Live, expectation breakers. So if you're in a stock or you're watching a stock, I always have an expectation of what this stock should do. It doesn't mean it's going to do it. Most of the time it doesn't. But if it breaks my expectation, I just get away, you know, or I get out right away, or I raise my stop, or I take a profit or something. I take a small loss if it's not acting how it should. So, and again, all this is going to come with time to get a feel for the market, you know, and how the market actually works, because the market is meant to fool the majority all the time. You know, the market is designed to take your money. So you have to develop your own strategy over time to understand that.
Yeah.
And go from there and manage your risk from there.
Awesome.
And some names maybe. Oh, go ahead.
Let's start talking strategy and entry points. If you want to share your screen, go for it.
Sure.
But I think the first thing I'd like to ask you is how do you define a true market leader, and how do you identify those during kind of each market cycle?
Relative strength is everything to me, you know, and IBD has their relative strength number, but it's not so much that, because sometimes that's spread over, I think, 3 to 6 months. You have to work. So you can gather, the market to me is all about gathering information. That's all you are as a stock speculator. You gather information, you take that information, and you use your process based on the information in front of you. I'm wishy-washy as hell, man. Like my complete view on the market can change in one day. And I think a lot of people, I think that's a problem with Twitter, is that people get so emotionally attached to a stock that they become associated with that stock. So now they're tied to the stock and based on everything they've said. Whereas with me, I don't try to get emotionally attached to anything, any stock. So That's really important, is to understand that you need to be able to just observe what the market is telling you and use that information to trade your plan. So if the market's coming out of a correction and you start seeing setups and you start to buy, if the first breakout doesn't work and you take your loss, then the next breakout doesn't work, you take your loss, and the next breakout, now you've got enough information to know, you know what, the market's not ready, I need to sit out, or I need to buy
Scale back. Yeah.
or breakouts aren't working, they're shaking you out, I need to buy pullbacks, it's not a breakout market. So you need to gather information and trade your plan based on what the market is telling you. So if today I was in all these names, I'm starting to build positions, the market closed great today. But if at 2 o'clock today, in mode, reversed hard,
right,
went below the low of the day on volume, the NASDAQ went from up 60 to down 200, all that feelings I had at 10 a.m. are gone. Like, you have to be able to change your opinion on a dime. And that's not what we're programmed to do. You're programmed throughout your life to, not be wishy-washy, right? But in the stock market, it pays and saves money to be wishy-washy as a trader.
Right. It's about removing that ego. I think Twitter, especially, people like to make calls and they like to be right and like to predict 2 weeks out. But yeah, I'm very similar to you. Like, if stuff doesn't act right on one day, I mean, that's feedback. Something has changed in the market, and it pays to be quick in the market for sure, especially if you're trading.
Saves me a lot of money.
Yeah.
I think that's a lot of people don't talk about enough, is losing the ego. Yeah. And I think that's another thing jiu-jitsu did for me. Men don't like to get their ass kicked, right? We have egos, we're macho. So jiu-jitsu, it humbles you, because no matter how tough you are, when you walk into jiu-jitsu for the first time, you could, you could have beat up people your whole life and that didn't know how to fight. And then you're getting strangled by a guy 80 pounds lighter than you. It's going to humble you. And the market's going to humble you. So you can take that information. You can say, you know what? No, the market, how many times I see people say the market is wrong. Like, when people post that, I'm just like, this guy's going to lose all his money. He's trying to argue with something that the market is the economy. The market is the forward-looking indicator. The market looks out, weeks to months ahead. It is the indicator. I don't that's my main indicator, not secondary indicators. I don't buy because the NAM's low. That's a secondary indicator that helps me to gather information and put all that information together. So you got to lose the ego, and you got to understand when you're wrong right away, and just don't stay wrong. You get in trouble when you try to argue with what the market's telling you, for sure.
Perfect. Let's get into some names, and maybe we can start by talking about your kind of 3 different entry points, buying setups that you discussed briefly earlier.
Sure. All right, let's go into I'll go into an IRA buy I did on Airbnb, which is, and I want to share this because it's typically not my style, but I do like undercut and rallies from time to time, and this was a bottom fishing pocket pivot, I like to call it. So I tend to do this with names like I think I love Airbnb. I'm not emotionally attached to it, but I really believe in the company. I've used it. I traveled to Europe a lot. When I had my online business, I could live wherever. So I lived in other countries. Like, I lived in Barcelona 3 months. I lived in Italy. I just did a lot of traveling, and I used Airbnb a lot, and I love it. It's just so convenient. So I believe in the company. I think we're going to have a huge reopening boom in the world. I'm already seeing it. I started seeing it in Miami this past year when the rest of the country was shut down. Miami, I'd never seen it so busy. Last six months ago. So I believe in the story. I just have to look for a good entry. And so this is undercut. So look at can you see this? My cursor. So this is a 137 low. This was a base it formed. It broke out, and then it just completely broke down. So this would be a fresh new base here, starting because it undercut the low of this base. So anytime I see an undercut, I'm looking for a rally back through it. And a lot of times, like Airbnb, it takes some time. I'll draw it on a chart. You can see how it's hanging out underneath the 137 level. I think I traded it a few times and took tiny losses, like literally like 0.33% losses a couple of times because, you know, like here, it's just too early, you know. But look at this move here on the volume. On the volume right here, it traded 200% volume on an undercut and rally here. That was the day to buy it, and that's the day I bought it in my IRA, and I'm looking to hold, you know, hopefully I can hold this for a while. If this is the bottom on an IPO that I believe in, this could be a long-term hold, you know, and that's why I bought it in the IRA. So I look for this, the day I bought it, I'll use a low of the day, but probably wouldn't have because it was so, look at the swing.
Right.
That's typically too much for me. So I plot a 10 in the green. You can see this is the 10-day EMA, and the purple is the 21-day EMA, and the blue and the red is the 50-day. So when it blasted through this, I have a stop on the 10-day moving average here.
Right.
And look at it, never has gone below it yet. Now it's back above the 21-day. It had a nice inside. Can you? If I zoom in, you can see it had an inside day today, and now it's holding the 21-day. So now I can raise my stop, and now I'm in the money. And I'll let this move play out. I'm going to give it a little bit more room than other stuff. What I imagine is going to happen if the market continues to rally, this will rally into the 50-day, and it'll probably reverse and sell off. If I was swing trading it, I might take profits into the 50-day. But since I want to hold it, I want to see if this move can play out. So that's an undercut and rally. I'll show you another undercut and rally with apps I traded, but I didn't really like how it was acting, so I got out. It was acting weak, so I got out. But here's 6180. Hold on. So these are examples of undercut and rally. 6180 low. Oops, hold on. Here, 6180 low. See how it did the same thing at undercut around here. But see how there's no volume in it? Is that, and so although
kind of wedging up a little bit.
Yeah, although it would be working very nicely, I took a profit up here on this reversal red day. I think I made like 2 or 3 points on it. That was in my trading account. Maybe I would have held it longer in my IRA or something, but that's another example of an undercut and rally. So I look for a low and a prior base or a pullback area. I use it with double bottoms all the time. So let me show you a name I'm in right now. I'll walk through this name.
I actually have a question about ABNB. If you can go to that for just a second. For those stops on the 10-day and 21 EMA, how do you like honor them intraday, or do you wait until the close to make a decision? Because it's kind of flagging out a little bit under 150 right now. I could imagine it has we have a gap down in the market, and then it reverses back upward in the morning. So how do you basically use those stops?
It depends on the overall market. A lot of times I will keep hard stops.
Yeah.
But if it's acting orderly and it's pulling back on low volume, a lot of times I'll let it play out for the morning. I'll pull my stop. If I see that the market's a little weak in the morning and it could get there, I might pull my hard stop in the morning, and then if it takes it out and comes back up, then I'll put my stop at the low of the day or something like that. But I do use hard stops a lot, and I can always just rebuy. But yeah, I'll use, if I'm trading in my trading account, if a stock, I usually use like 10, 20 cents below a moving average. Or if I'm holding it and it does shake out below it, then I'll use the low of the day if it's pulling back in the morning. If the market's if we're having a change in the market and it's, you know what I mean? The NASDAQ's up in the morning and it rolls over and you're getting the 6th distribution day or something, and everything's sold off on volume. I won't wait till the end of the day, because a lot of times it can get really ugly. I'd rather just a lot of times I'll cut it before it even gets to my stop. And then if the market, then it takes out what would have taken out my hard stop, I'll watch it that day. And if the market recovers, I may re-enter, and then I can use the low of the day or something like that. But yeah, it just depends. So that's the thing. You got to develop your own strategy. Some people hate hard stops, and I get it, but sometimes that saved me so much money,
Right.
So you have to have, I think time helps you with that, and understanding of how the market's working. I think you get a feel, like I said earlier, if you're in the markets for a very long time, you start to get a feel. You're probably starting to get that feel, right?
Yeah.
You just, like, when something's off, and then if things are healthy and you feel like that's like that couple Fridays ago when a lot of people went to cash, it didn't freak me out. Where there's been other Fridays where the NASDAQ breaks the 50-day and I'm like terrified. I'm like cashing everything, my IRA, everything. I just didn't get the feel that I've had in the past. I felt like, well, why are breakouts working? Why are my stocks green today? If this was really bad, they'd be taking profits in these. So it's just, again, gathering information over years, and just, it takes time,
Yeah. I think I remember like a few weeks ago, well, for the longest time, stuff wasn't working, stuff wasn't falling through. And then there was like one end to the week where there was like a noticeable shift. It felt like where the growth stocks kind of decoupled a little bit from the indexes and started acting on their own accord.
That's what I love to see.
Yeah.
So I'll get in. Like I said, I don't think the indices play as big of a role as they used to.
Yeah.
Because of the magnitude of some of these mega caps.
Yeah.
But to see that character change, I don't need to wait for a follow through day. I may not buy the first breakout. Like I didn't believe Upstart, that rally from the lows when it doubled in like a week from the bottom. But then it gave me the confidence to buy the breakout in RBLX. You know what I mean?
Right.
So that's what you need to see. And I think we're seeing that a lot right now, is that the indices are kind of, they're chopping along. They're looking great now that we're almost going to get to a power trend here, hopefully in the next week or so. But you're starting to see individual leadership names, growth names, act different than the overall market. And that's what I love to see. That's when I start to get heavy and build positions, because then once the market rips, these things just take off. They're the leaders. They're telling you they're the leaders. They're showing you relative strength before the market's showing strength. So
yeah. And just getting back one more point about like the experience and getting a feel for things. I remember when I cheered Monday morning gap ups, and now I prefer Monday morning gap down, because you see how things respond. And often if you missed a good entry late in the week last week, you can buy the opening range breakout, manage your risk at the low of the day, and get a really, really nice entry point, because you can keep your risk probably less than 1% even. So
exactly.
Gap downs are better in my view.
Yeah. People want the gap up because you have money invested, right? It sucks to see your P&L down. Everyone hates that, but you can gather a lot more information by those gap down days than you can the gap up days. Monday morning gap ups typically suck. Last week, I had a feeling it was going to work though, because the way a lot of people got bearish on Friday. But so every once in a while they're okay on those situations when I'm invested.
Yeah.
And I know a lot of people went to cash. Now they're in chase mode, and that just drives the market higher. But if the market's been running for a few weeks, your stocks are extended, and you get a Monday morning gap up, I'm like, fuck, we don't need this right now.
Right.
So it's all time in the market. It's just, like I said, observing,
Yeah, for sure. All right. I think you're bringing up FRHE or FRHC, I believe.
Yeah, because I wanted to show, even though I didn't buy the undercut and rallies, there were a few here that you can see.
Right.
So this is another example of undercut and rally.
And this is a Gil Morales strategy, right?
Yeah. So you can see this.
Yep.
Okay. So this is the type of undercut and rally you can get in early off double bottom. So I'm going to get into this chart in a second, but you can see the 44.20 low. It had an upside reversal these days. So you might have bought it here and then like, oh shit, got shaken out here. But if you bought one of these, you could have sat with it. Like this one, of course, this was the one to sit with. I missed it. But that's another example of a double bottom undercut and rally I like. But yeah, let's get into this name. A lot of people I didn't really talk about this until after I already had a position, because a lot of people are buying Tiger and FUTU. Although they may work and they could be huge leaders, I don't like to buy stocks that have big corrections. There's a lot of overhead supply, 50, 60% basis. So this name like blew my mind. It was a name that actually Matt Caruso and I talked about up here.
Yeah.
We talked about it up here, and then it just didn't work. The market wasn't ready. This chart wasn't ready. It needed more time. I mean, this thing broke out of look, you got a first stage base here, and then it undercuts during the COVID, and then it gets a first stage base here, and then it runs up 300%.
Right.
And then it only corrects 32%. Hello. Like that's a huge a huge sign for me is
Right.
that when I see a stock go up that much and only correct 30%, like that's giving me a huge tell.
Right.
So I started to watch the weekly, and I missed. I'll get into the daily in a second, where I missed the ideal setup, but it still worked out. It's still working out well. So if you look at this base, I love it. Everything about it. It runs up. It rides the never even gives you one sell signal at all here until this big weak bar here, the reversal week. So I mean, you could have literally bought this and rode it up the entire way up, and made a fortune. And a lot of people, I don't like to buy third, fourth, fifth stage bases after this type of move, but I love first and second stage bases. Every stock I own right now is a first or second stage base. So a lot of people are focused on 2020 leaders, and a lot of them are in third or fourth stage bases. I think Shop's in a ninth stage base. It's like,
yeah, I've never seen that.
I want to be in names that nobody's talking about,
Right.
And this is a name that nobody was talking about. And I love the base here. So look, we have a huge run up. We have a nasty, every stock during a market trend is going to break moving averages a lot of times, but it never broke the 40 week,
Right.
got support at it. And that's what I love to see. So it actually, to me, this is about as perfect as a base you can get. So it never really had any massive selling. So even when it broke the 10 week, this is mild, for a weekly, and it immediately comes back up and forms a double bottom, gets the shakeout below the old one, right at the support at the 40 week. And then, as you can see on the second leg down here, look at this volume dry up right here.
Yes, nice.
It's volume dries up and all the sellers are gone. Then you have, this is really important, these two tight weeks. Start to see upside reversals here, and they trade tight for the week. That tells me that funds, okay, they've had enough. They're supporting the stock here, and that's a very important tell. So it was very easy to make money in 2020 in the process of studying charts, and that's why, again, this book is so valuable, because William O'Neill goes through all the flaws, and if you read the book over and over, you start to see things. You can just scroll through charts. So I'll start with weekly charts. I'll go through, and then I'll go to the daily. So I love the weekly. Love it. And the monthly I love too. Look at this bull flag on the monthly. It's beautiful. So it's formed a bull flag, and it's trying to break out of this bull flag on the monthly after a huge move up. So I love it. Fundamentally, look at this. This is insane.
Yeah. It's a big jump. That's a breakout year right there. Minervini calls that a breakout year.
Name one other company that's going to grow tenfold earnings in 2 years. Tenfold. Right. It's insanity. Like the growth they're expecting. And it's in what I also like. Look at the group it's in. Financials are leading. Right. You got FUTU, Tiger, Riley, all the names. Everyone's eyes are in these names. And you have this name growing just as much or more than them. And then this is another thing I look for, is accelerating revenue. Look at this. Goes from 12 to 34 to 93 to 111 to 239.
Right.
Like, hello. And then you got the EPS accelerating from, went negative briefly. And then you have an acceleration here, but it's hard to keep that up. You got 3 straight quarters of triple digit EPS. And then you have, like I said, this is just enormous. And then you have a nice return on equity of 20%. If you read How to Make Money in Stocks, you want to see 17% or higher. Right. And then you got, fund ownership has tripled in a year from 25 to 75. So I absolutely love the chart. I love the story. There's a lot of Matt Caruso talked about this stock, and he's like, there's a lot of tailwinds. If you bought China in 2000, you could have made a fortune, right? When they started to have their turnaround. I know people are freaked out by Kazakhstan, right? But the country's going through a change, and this is a leading financial company in the change. So people like Kazakhstan, they're freaking out. But look at this. This is all I need to know. The chart tells me everything I need to know about the stock. So let's go over how I traded this. I got in. I missed this move, and I was pissed. Like, shouldn't have happened. This is called a moving average undercut and rally. So it moved through the 50-day on volume, and I didn't see it till I think this was on a Friday. Yeah, Friday, I think.
Mm-hmm.
Yeah, that's a Friday. Yeah. So this was a long weekend. It moved through, and I saw it over the weekend, and I was pissed I missed it because this is a name I've been wanting for a while. So on Tuesday, my plan was, if it comes out of this wick, I'm going to take a portion, because I got to feel, man. You got to feel. And
Yeah.
I got to feel that with the volume coming in and the way the market was turning around, that this, and the way FUTU and Tiger are acting, that I don't think I'm going to get my 50-day shot. So I took a chance. I would have used the low of the day once it pushed out, but I bought, when it came out of this wick here, I bought a small position.
Mm-hmm.
Bought a small position when it came out of this wick here, and then it got tight, and this
Mm-hmm.
was the real tell for me when it moved all the way from here to here on volume, and then it had an inside day. So then in the next inside day, I bought some more, and then it set up a mini double bottom here.
Mm-hmm.
See how it's like 53.
Right.
53.20 is a high over here. So I was going to add more when it broke through this. And we're still close enough where you can see the hourly. This is impressive. So look at this hourly.
It's really tight in there.
Yeah. So this is the high we're talking about. And I'm a little off here, so it's a little higher. So hold on. All right. So it got really tight for 2-3 days here, and just like unbelievably tight, like incredibly tight. And look at the volume dry up. So this is what I'll use the hourly sometimes. I typically trade, I look at a weekly, then I'll go to the daily, but then I'll zoom in on the hourly. So this was a huge tell. It had a little quick move above, but didn't hold. So I wasn't using that. I wanted to use the 53.20. So I put in a buy stop for 53.25, and it pushed out, and now look at it. And then now I'm just sitting, and look how beautiful this is acting. It pushed out on volume, had a pocket pivot off here, and now today, if you can, it's a blip, you know. So I'm already pretty heavy in this, to be honest. I don't really need to add, but if you're watching this and it comes up, I'm probably going to break out before, hopefully. But now you're looking at the 58.10 pivot, and hopefully we can get an inside day or two, and then a rip through the 58.10 double bottom buy point, and hopefully off to the races. So if this had now, because of my entry, I think my cost is like 52.70, my cost basis. So now if this rips through 58.10 and then has a high volume reversal, I can get out with a profit. I can make 5 or 6 points on it. But this stock I'm really, really bullish on right now. It's acting phenomenal. So let's get in.
It seems like you're always trying to work yourself in before that kind of standard double bottom pivot. You find a stock that's kind of setting up a good chart.
Yeah, I'm always talking about how to make money in stocks, but you got to understand, like, that's just the framework. You got to develop your own strategy, and I'd like to always get in before the obvious pivot. I mean, this is in an IBD 50 now, and it's going to be talked about, the pivot. I mean, if you own Market Smith, they already draw the pattern for you. So there's going to be a lot of eyes on it. Doesn't mean it's not going to work. I think it's going to work, but I'd like to have that. I'm going to have about a 10% cushion when it breaks out. So that's what I like to see. And I would, if I wanted to add more, that's where I would add probably. Or maybe, if this tightens up for a few more days and it doesn't break through here, if we get, sideways action, I'll take an early entry through this high here. That's another option. Let these, I always like to see how a stock trades when it's above the 10-day. And then I want to see this, it's acting perfect. It's tightening up above the 10-day moving average. This thing could gap down tomorrow, and when you release this video, it look terrible. But again, as of now, we're just gathering information, and as of right now, I couldn't ask for it to act more perfectly. Let's get into a name I sold for a profit recently, because I can show you an early entry where my risk was really, really low. So this is AMAT. I had missed some NVIDIA, so I got an AMAT. AMAT setting up a double bottom here with a 138.67 buy point. It's actually above it, but it's kind of not breaking out, so I would use this now. But anyway, they reported earnings after the close on this day. It moved up on volume that day, and then they reported earnings after the close, and then it sold off right here. This day is the next day here, the red day. It sold off on earnings a little bit, but I mean, I wouldn't call that a sell-off, right? So I was watching the 21 day, and then it closed above the 50. And as I thought it might happen, it would shake out below the 50, get some people out. But look, it bounced right off the 21 day. And that's where I entered. I think I had like a 128.18 cost. And now I can use the low of the day. I remember putting in a sell stop at 126.90. So my risk was like way less than 1% or something. It was like 0.09% or 0.08% or something. So now I can let this play out, and then on the next day, sure enough, it rips, and then I raise my stop to the 50 day. Now I'm in profit, and I have no stress. And then I sold. I wanted to. Sometimes, you know, we don't know what the market's going to do. We can gather all the information we want, but you got to learn from your mistakes, right? And one of the mistakes I was making the last few times the market rallied is not selling anything and to give back nice gains. So I wanted to take something off the table. It had an outside reversal on the breakout. It tried to break out and reversed. So I sold it here and I booked 10 points. But then I got into NVIDIA, which is the real leader. So, and this is something I'll show you, which is a good example of you have to understand what's going on with the stock in the market. I normally hate to buy cup with no handle breakouts. Normally don't do it. But the way NVIDIA is acting, I did it. And I had no problem doing. Look at all this volume. This is a $440 billion market cap company, and their volume is absolutely insane. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 out of 13 days, it's on above average volume. So NVIDIA has a history of huge run-ups followed by long bases. So if you look at 2016, it broke out of this. It traded sideways for a long, not too different than now. It did get up a little bit, but look how many base finally broke out. Second stage base went from 33 to 200. You know, massive move. So if you go back to present time, base. This is another base here, and you can see it on the daily. So basically, it's been basing since September 2020, last year. After it ran up a second stage base, forms a third. I don't like to buy third stage typically. Forms a base on base, and then undercuts the low of the base. Now we resets the base count. So this is NVIDIA on a first stage base, and then it forms another base on that. So like, to me, this was just like rocket ship time, you know? Base on base. The longer the base, the bigger the breakout, right? So I had no problem. That's what I'm saying is, like, I would never buy a cup with no handle breakout in a lot of times, but you got to understand what type of market you're in, what type of stock you're looking at here, and understanding that this thing is just ready to go finally, you know? So I bought this day. I missed this move. This is when I was buying AMAT because I had missed NVIDIA here. And then I sold AMAT for a profit. I think a day or two later, I bought NVIDIA right here, you know, tried to sell off and then closed. And the volume was there showing me that it wanted to be supported. So when I bought it, I used the low of the day. I think my stop was like 1.3%, if I remember correctly. And then it just ripped. And now I'm in the profit. And it's acting like the market leader for sure. The 10 days trending above my buy, and I can just use that as a selling guide early on. But hopefully, you know, we get a sustained rally for the next 30 to 60 days. This could be a huge winner. I mean, like I said, I'm amazed by the volume. Today they tried to sell it off today. Did you watch this today?
Yeah.
They tried to sell it off. It was up in the morning here, and they tried to sell it off. Unbelievable. It's been up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It's up 12 out of 13 days in a row.
Right.
Totally reasonable to sell off today, and it didn't. That's
Right.
just telling me another RS new high today. That's
Right.
just telling me how strong this stock is and why I had no problem getting rid of AMAT. Looks great, don't get me wrong, but this is the leader.
The
And
leader, right.
you always want to have your money in the leaders for sure.
Going back to AMAT actually, and talking about buying pullbacks into the 21 EMA or different moving averages. How do you actually do that? Do you buy it as it's coming back in, or do you wait until it kind of pushes up off it? And how do you manage your risk in that circumstance?
Well, a lot of times it'll tell you how strong it is.
Yeah.
So when AMAT pulled back to the 21-day, I couldn't even buy it there because it hit it and it was gone.
Yeah.
And I was like, okay, they're supporting it here. I immediately put in a buy, and I didn't get filled till 128.18, which is, hold on, 128.18, 50 days at 128.69. So I got in just under the 50-day. So I got in between the 21 and the 50. If a stock pulls back to the 21-day and then it just doesn't get support there, I'll watch it for a little bit, and then if it gets support, I'll buy it. A lot of times it'll shake out under it, and then sometimes I'll use a 5-minute chart to see how it's setting up.
Yeah.
I learned that from Gil Morales' website. I used to be a member. He uses called the 620 chart. He uses a 5-minute chart, plotting a 6-period and 20-period. So a lot of times, if I really want to get a good cost basis, I'll narrow it down to the 5-minute, but that's just for the entry. It has nothing to do with how I trade it after that. It's just trying to get the tightest entry I can. So yeah, the way I buy pullbacks to 21-day, I like, let's look at, or the 10-day. I didn't buy RBLX today on the 21-day pullback because I don't like to buy pullbacks.
It's super extended right now, short-term extended.
I don't like to buy the first. Yeah, I got in. I have a great cost here. I got in at 78.10, and this is what we talked about. Look at the low of the day, 77.31. So my risk, I would use a stop on 77.31. I usually use 10 cents below. So let's say 77.20. My risk was 90 cents on this trade. Look what it's done for me. I'm up. Before today, it was already up, 20, 30. Still up about 20% on it, but I didn't buy this today, even though, it held the 10 EMA. I just don't like these sharp 1-day drops. I like orderly handles to moving averages. So a lot of times I'll pass on this, and then I'll see how it acts over the coming days. So tomorrow you might see it like shake out below and then rally back is what I would bet if I was a betting man. But or it might just gap up and rip. This song's super strong, but I'm already have a good cost. I don't want to mess up my costs and have to start selling stuff if it doesn't work. So it all depends on how the pullback to the moving average is. Normally I would buy the first pullback to the 10-day on a strong stock like this. I just don't like the way it did it today. It was all just straight down. If you look at these, if you pull up a candle chart, you can see here with these closes, the last 3 days. Although it looks super strong, you can kind of tell they're just taking profits over every time it gets over 100. They're taking profits. So once the buyers around 100 left, you saw the thing pull back. I'm super confident in the stock. I really believe in it. I just don't think I need to do anything yet. I think with my cost basis down here, I want to give it time and let the move play out. If I missed it, maybe I would have taken some, but I still don't like the way it pulled back today. So a lot of people on Twitter were buying this, like trying to get early entries. Here's something I noticed. If a stock acts weird like this, I'll wait for a traditional pivot. Because sometimes there's stocks that just chop on early entries, and IPOs especially, I'm really hesitant to buy. I wanted to see it get out of here first. Whereas other names I might buy, the 21-day down here. I might have bought that, like this was a great day to buy here, this reversal.
Right.
But I just said to myself, you know what? I don't want to just get chopped up here. I don't have a lot of confidence in the market yet. Another thing was the market wasn't super strong right here, right? This is where it all started right here. So if I had seen this type of action and other names, maybe I would have gotten early. So you have to take into context what's happening in the market. So I just had a feeling once it could finally push through 78, it was going to go. And then, it just ripped. So this is acting great. I don't have enough size in it. I went pretty light because it was the first one of the first breakouts after a tough market. If it had done this week, I probably would have went a lot heavier on the breakout, but that's how it goes, always trying to manage risk and stuff. So, so that's RBLX. I own that. I went through Freedom Holdings. I went through NVDA. Let's get into, this is a stock I screwed up.
The recent IPO, yeah.
Man, I sold it the other day. Look at this move. Wanted to just book a profit, but this is a non-traditional entry, I'd say. But it was trading resistance at 30. It almost formed like because it was an IPO, it almost formed like a 3 weeks tight on the daily. I know that's not a real thing, but it was acting like it. I knew once it kind of could push through 33 because it kept getting resistance at 33, 1, 2, 3, 4 days in a row here. So this day, 90% of this day here, it was an inside day.
Yeah.
So what I did is I entered down here with my stop right here, the low of the prior day. I really like inside days too. Sometimes I take positions on if a stock's acting really healthy. Before it moved at the end of the day, this was really tight here.
Yeah.
And so yeah, I took a spot down here. I think my cost basis even after adding was like 31.97, but I bought even like lower down here initially, and I was going to use the low of the day. I just felt like it was, again, you get a feel like I felt like it was ready to go, and it ripped, and then yeah, I sold it too soon. Again, I just wanted to book something. I made 10% in a few days, so I booked it. I like to do that sometimes with a few names because I don't want those little losses. I want to make up for those little losses.
Yeah.
So if I can book I booked AMAT for 10 points and this for 10%, I can kind of make up for some of my small losses. Now my P&L gets built up again, and then I can kind of sit with some new winners. I love this story. I love the stock. I'm watching it. If I knew this was going to happen, I wouldn't have sold, but it's acting great. This is one for the watch list for sure. I'd like to actually set up better, because I mean, look at this is not a traditional buy. This is the odds are this is going to undercut this someday, right? If you know anything about IPOs, and I'm just getting into this book here.
Yep.
The Lifecycle Trade. So most stocks will undercut the IPO. So I'm a little hesitant. I'm just going to watch it for now, see how it acts.
Yeah, maybe it forms an IPO base, sets up again, and then breaks out through 40. Who knows?
Yeah, exactly. This is a name totally under the radar, totally weird name, but I don't know. I've just been watching it a while, and I'm getting a feel for it. My Teresa, I kind of like the IPO base here, the way it's handling things. It's got accelerating revenue 37, 45, 57. It's got some big triple digit quarters. It didn't have it here, but look at this estimate.
Yeah.
540, 54% estimate. People are crazy. They spend absurd amounts of money. Someone posted some receipt from Vegas, and someone dropped $400 on Fiji waters. Like, people that want status, they'll spend money. And this is like an extremely high end thing. But one of the things that got me to really take a look, because this, honestly, it's thin, it's weird. But I own NVIDIA, which is a massive company. So I like to throw in these small, it's got 10% short interest. It's a thin name. But I saw this. Can you see that? T. Rowe Price. So that's telling me something. T. Rowe Price is one of the, I have I put in a bunch of funds, great funds. So if I can go to this screen, you can see what funds own it.
Right.
And to see that T. Rowe Price bought this, I kind of like this. This is the setup I took, super low risk. I'm not going to lose money on it now unless it gaps down. So this is forming a flag here. It's been getting resistance at 30, high 32 area here for a while. And so with a thin name and wide spreads, I didn't want to buy the breakout, because if it reverses, I can get hit. So I bought it down here off the 21 day. I actually bought a little bit below the 21 day on Friday, and I was using the low of the day as a stop. So that's how I'll kind of trade some thin names. And then look what it happened. I got a feel for the stock. Look what it did this day. See how it closed down. See how it closed down.
Right.
See how this stock, because it's thinner, tends to open down in the morning and then close strong. So I kind of had a feeling it was going to do that the other day, and it did. I didn't really risk I think my risk was like 15 cents when I took the trade, and now I raised my stop. I'm in the money now. Today it pulled back to the 10-day and held. And I'm looking for a rip out of here through 32.71 over through this high here, and it could go. I mean, this could be a high beta name, or it could do nothing. You know, that's a little bit of a different type of name for me, but I do love the massive EPS. So anytime I see something like this, my eyes get a little wide, you know.
Yeah, for sure.
And then I'm looking at what else. This is a name I'm looking at a lot right now. I actually took a little bit of a position today because I had an inside day. I love this story, and I love that it's a first stage base. See that first stage base?
Yep.
This ties into shipping without having to be a shipping company. These guys lease containers. The margins are absurd. And look at this earnings growth accelerating: 75, 86, 328, 582.
Yeah.
That's absolutely massive.
And the revenue growth as well. Yeah.
Yeah. And you're starting to see accelerating revenue. Small on the smaller side, but this is making up for it. You're seeing 198% growth. You're seeing fund ownership grow. You know, I like these early names where you get 200, 300, 400 funds own it. So
yeah,
it does have fund ownership, but it's not like absurd like an NVDA when they got 4,000 funds owning it. You know, it's got really good fundamentals, and I love first stage bases, and this is kind of an under radar name. And so today I missed the breakout here, had a breakout, but look how it pulled back. I was greedy on Friday. I wanted to get this at the 10-day. I should have just bought it here, but it's starting to flag here. So, and I love inside days. So I took this rising 10-day is going to be above the low of today. So what I did was I bought down here today, and it'll be like I only took, you know, I think half a position, and I use this as a low of the day, which would correspond with a 10-day, not a lot of risk, but I love how it traded today. It had an inside day, and I just don't feel like it's going to pull back anymore. So I'm looking for it to move through this downtrend line flag here. But I think this name looks really strong. And I think the story fits well right now. And I think this could be a big winner, you know,
for sure.
And again, my risk is super small. I think my stop was, what's this here? The low here is 32.14. So I got in, you know, a little bit below this. I'm up a tiny bit on it. So, you know, less than $1 but it's not a full position. So
yeah,
my risk is super small here. And then this is another name I've been watching, an IPO.
Right.
I totally screwed this one up. OLO.
This one been powerful. Yeah.
Man, I'm so pissed about this one. So this one just ripped.
Yeah.
I thought it would kind of, the way it had I was watching it around here, and I'm like, I don't like this reverse, so maybe it'll like handle a little bit, do a high handle, and then it just ripped.
Yeah.
So DV kind of reminds me of this. They had you know, it looks pretty weak, right? But then they have an earnings report here, kind of took the street off guard, and it rips. Just rips from the bottom straight up. And now it's forming a flag here, and I like a handle. So I like it through, you know, 37 plus range here, but it had an inside day today. And look at the risk I have. I'm going to use this rising 10-day is going to be above this tomorrow. So my risk is really small. I'll use this Friday's low as a stop, which will correspond with the 10-day. And I'll just keep watching it. If I have to take a tiny loss, I'm fine with it. But this is like a little bit of a cheat spot for me here, and because of the risk. Now, if I bought it way up here, I wouldn't have done it because I would have had too much risk. Does that make sense?
Yeah.
So it's flagging here, cheat entry. But I'll probably add, you know, once I can see it get through 37. If you look, every time it comes up to 37, it gets rejected. So
yeah,
I'm looking for this to get through 37, but. You know, another one. I'm a trader technically, but look at the fundamentals.
Right.
32, you know, good sales growth. But this is why I'm really buying it. the estimates, 192% EPS growth and another 32%. So when you look at the following year, these are rarely right. You know, typically if I see this 192 and it follows through, this 2022 estimate is going to be much higher.
Right.
So, you know, I like this. And again, 3 months ago, I'm not touching an IPO. You know, you have to understand what's going on in the market at the time. IPOs are working like this is what's working right now. So if you can get a low risk spot on a name with explosive earnings growth and it's got a decent base setting up, you know, I like how it's acting here. It rejected and then just kind of like getting tighter here. See how it's getting tighter?
Right.
Like wider here. And now the last 2 days is tightening up. Inside day, another back-to-back inside days. So didn't want to touch it until something like this. So I've been watching this since around here. So came up on my screens like a week or two ago. So it's another name I'm watching. Yeah, those are some of the names I'm watching now. I own about 6 or 7 names. I'm looking to, you know, maybe just get up to 8 names, and that's about it. I like to be concentrated.
Yeah. And can you talk a little bit about how you build into positions and kind of your position sizing in general? Are you sizing IPOs the same way you're sizing a liquid leader like NVIDIA?
No.
Go ahead.
Yeah, I'm sizing my IPOs like Roblox. I sized it. I still size it at 15%, which to some people that seems like a lot, but for me, I usually I want to make money when I'm right, you know, and take a small loss when I'm wrong. So I typically, you know, take 20% positions, you know, and then I might own 4 or 5 names and build up to 20%, and then if the market's really strong, I'll buy 3 or 4 more and use margin. You know, I don't recommend it for someone new, but when you know how to manage risk, I have no problem with margin, you know, and I'm building over time. I'm not going from 0 to 100% margin. And then you get a massive gap down in the markets and you just, you know, destroy your account.
Right.
It's building over time when I already have booked some wins and I have big, I'm up 20% in Roblox, you know, I'm up good on NVIDIA. I'm starting to get up on Freedom Holdings and some other names. So then, you know, these last couple of buys are going to go into margin, you know, and I do size smaller. But I will, if it's acting right, like, I mean, Freedom Holdings thin, but I have a big position in it. You know, it's about a 25% position, which is a lot for a name like that. And NVIDIA is my second largest holding. To my other holding here, this is a good one to talk about, is InMode. This is right around the same size as NVIDIA right now because of my entry. I mean, I had a really low risk spot here. Look at this.
Off the 50-day,
yeah, it pulled back the market. It normally, like, someone could be like, oh, this cup looks like V shape, right? But you have to understand what was going on with the NASDAQ at the time. This chart looks almost identical as the NASDAQ. You know, the way the NASDAQ came back and then rallied up. This looks identical. So this is only, and the weekly has it, this is only a second stage base. So, you know, this stock I have nightmares about because I got destroyed in this stock in 2020. Kind of messed up my year. I was trying to trade this and it had an earnings release here and I bought through the downtrend line. And then I left. I was training Jiu Jitsu and I went back and I just got wiped. I was way too heavy and it just messed me up. And then look what happened. It got destroyed. Obviously I sold around here. But anyway, I was hesitant to get in this. It had to prove itself, but it's acting great. It formed, you know, a first stage base on base. It went up 150% and then it only corrected 27%. And it was holding up extremely well when the market sucked in here.
Yeah.
And then that it had a quick flush. No, volume is not even crazy on the flush. I don't consider this too crazy. And then immediately once the NASDAQ stabilized, it ripped back higher. So I saw the cup and handle set up. I love the fundamentals. A lot of medical names are acting well. PGNY is a name. I just can't seem to get into that stock. Right? I want to be in it, and I just manage risk too much. But if you look at the fundamentals on this, every single one of my stocks has this, now that I think about it. Accelerating revenue, accelerating earnings.
Right.
negative 21 during COVID, 49, 60, 62, 26, 104, 130. These are only 30% estimates year over year. But when I start to see this, I don't really believe this.
Right.
And you got really strong fund ownership from 73 to 192 in a year. Extremely strong fundamentals, so 41% return on equity, strong earnings growth, strong group. Medical names are leading. I think Kacher, this name, Kacher or whatever, that's been a leader. That's in the same group. So I like to see, a sister stock from the same group showing strength, and this name is showing huge strength right here. So that was another tell for me. And the fact it's a second stage base. And I love, this is the same thing that got me excited about Freedom Holding move, giving a little bit back. There's a difference between 100% move and a 50, 60% correction to a 27% correction.
Right.
So I've been watching this for the right setup, and I got a perfect entry on last week, pulled back on low volume, below average volume to the 50-day. I bought it here and it closed above my buy point. The next day got here. Then I can start to raise, when it went here, I raised my stop, and I'm already in the positive. And then today, this is the situation. Like I actually had a buy stop in for more at 87.10, but I didn't like that it was gapping up. So I pulled it, and then it just ripped to 93. I want to see how it acts in the next few days, but it's running into resistance here at 90. You can see.
Yeah.
Been able to close, and it closed below it. So I love how it's acting, but massive volume today. Huge move, but now I didn't want to chase here.
Yeah.
So I already had a good size though. This was, if I had bought more, it would have been, my second largest position. But I wanted to wait. I want to see how this acts. But I think this is looking really strong. This is a feature IBD has. Blue dot.
RS new high, yeah.
RS new high, blue dot. So this is a name I think could be a big leader. It's my third largest position. So yeah, we'll see how it plays out. By the time this video is open, we'll see where this goes. But I want to see how it trades. If it can stay in this wick, Ollie talks about these. If it can stay in the wick here for a day or two and push out, or if it just shows strength. But I'm going to I'll see how it acts in the morning, but I'm not going to let this turn into a loss. I'm already up,
Yeah.
I'm already up 8 points on the stock, So I love when I can get a huge head start right away. So this is the, when you ask me about 21-day pullbacks, this is the textbook type I want of
Right.
50-day pullback or 21-day, especially when they're corresponding with each other like AMAT was. They're all right around the same thing. So you get the little tiny undercut of the 50, then it closes above the 21-day. That gives me a lot of confidence, And
Right.
Sure enough, it just rips. So those are my current names. I think it gives you a little bit of idea of all the different types of buy points I use based on all those names. So yeah.
Yeah, I found it interesting. Even though you said you sized them a little bit differently, your focus on very new IPOs. Even that GLBE buy, that's even before the IPO base. So I thought that was really interesting.
That was really rare, to be honest. Don't think I do that all the time. I was watching it, and the way it was acting, I was watching it all day, and how it was being supported at the end of the day. So that was a little bit of a different buy. The way the market is right now, it's telling you IPOs are working. Look at most of the leaders right now IPO'd in the last few months to a few years, So yeah, it all depends on what the market's telling me. There might be markets that I don't even touch IPOs, but relative strength, man. These are the names acting well. So
yeah, and if you actually go to a weekly on InMode, this is one I actually traded in during its IPO base back right in here. Got a nice quick run, quick move.
IBD was talking about it every day.
Yeah,
it was just too. And this is when I tried to trade it on the first stage base. And they were talking about it every day, and the market was getting weak. It was the end of the market. Right before the bear market here. Just bad timing on my part, but I always like this story. Humans are very superficial, and you know the story, right? They
Yeah,
do
cosmetics. Yeah,
cosmetics things, and it was just a terrible time to own it during COVID. But now it's a great time to own it. People want to look good. They want to go back out. People want to spend money. They want to look good. They want to look younger. So I think this could be a huge winner over the next couple of years. I doubt I'll hold it that long, but look at this 170% EPS growth rate. So
yeah, that's insane. That's crazy.
This is 127, 68, 177, 211. So even during COVID, they're growing their earnings. You know, that's super impressive. So what could happen now after COVID is people have a lot of money. They want to spend money. They want to look good. So yeah, I'm really bullish on this name. We'll see what happens, and it could be a huge ripper. I mean, it's only got 12 million shares in the float,
Yeah.
So that's why I like to take early entries on these smaller, thinner names, because I know my risk. You buy a gap up here, it's like, okay, where do I sell?
Yeah.
So
yeah. And would you say you're kind of more willing to hold a kind of more mature company for a position trade versus a more swing trade for like a Roblox, a younger stock? Would you say that's true, or it depends?
It depends. Roblox is the one that I want to hold the most, to be honest, because first stage, based on IPO base, this could be a life-changing money, and that's exactly why I didn't add, to be honest, because a lot of times if I rush to add a trade for something I really want to hold a long time, I mess my cost basis up and I end up selling it. If I bought this here and then we get a gap down tomorrow, I might sell the whole position, got a frustration. But I love the way this set up. It formed a base, it failed, and then it forms this little double bottom base here.
I love the volume coming into this one. We talked about it on NVIDIA, but this is similar. A lot of volume coming in.
Yeah, tons every day, like every day volume. So yeah, I if I can hold, this could be a 10 bagger, it's just a matter, can I finally hold the stock through a base? And that's why I've been hesitant to add, because I really want to let this move play out. This feels like a monster stock. It really does. Kids get what they want and they're obsessed with this game,
Yep. Perfect. Jay, is there anything else you want to talk about on charting, or do you want to wrap it up?
We've been on a while. I think we've been on about an hour and 40 minutes. I don't want to bore people here, but you get the gist of it. You get the gist of it. This is just the current market cycle. The way I trade might completely change in other environments, but I eased into things here, and then now things are working, so I'm starting to go a little bit heavier. I love what the overall market did last week. I really, really love how it just shook some really good traders out. It almost shook me out. And then, gap and go last week. And then the way we closed today is just showing me there's a huge character change right now. And again, that could change tomorrow,
Right.
But as of right now, I'm looking to, get a little heavier and start using a little bit of margin. Maybe I have some nice gains on some other names, and looking to this. There's a lot of merchandise I like right now. So that's giving me a lot of information. So that's another thing. If you're looking for buys and nothing looks good, it's telling you, the market's giving you information. So when I know there's like 15, 20 names I want to own, and I have to like really be selective, I get excited, because that's telling me the market. And and I'll miss some names that are going to do phenomenal, like OLO. Whatever, it is what it is. GBLE today, I shouldn't have sold it, obviously, but that didn't break out of a proper base. It was like, I'm going to take my 10% off a weird entry like that when I can get it. If it had broke out, like, I would still be holding it. If it broke out like Roblox did, Roblox did. So it just depends. Everything changes, but you got to be flexible. You got to study. You got to put in the work. You got to love what you do. You got to love the grind. And you got to develop your own style, and you have to manage risks. So that's really it for me.
Perfect.
As you can tell, I love talking stocks. I post about it all the time. So
perfect, Jay. Thanks for showing us charting and how you work your way into positions in different market environments. I always like to end it with this one last question. What advice do you kind of have for new traders to kind of shorten their learning curves and kind of get to like profitability and consistency as quickly as possible?
Study past winners. this book, the first 100 pages or so, has chart after chart after chart of everything going on in the market today has happened before. Everything going on with crypto right now has happened with stocks. Everything that's going on with AMC, GameStop has happened before. Everything. I mean, they were trading tulips in the 1600s in a bubble, you know? So study history, look at past charts, what they look like, and you'll start to get a feel. And this takes time. Like, I see people wanting to get it right away. This is 20 years of my life. I had a dream. I want to end it with this, you know. I always had a vision that I wanted to trade my own money. I'm up in Cape Cod right now where I grew up. I wanted to live in Cape Cod in the summers and live in tropical place in the winter. And that was my goal. And I thought I could get there as a clueless 28-year-old with no money. It took me 20 years to get to this point, and a lot of like, enjoy the process. Look, everything, every hardship I went through in life, everything I've learned in life, I've gone through some real shitty times. It all got me to where I am today. And if you just have a passion for something and you always keep it in the back of your mind and you put in the work, anything's possible. Like, I'm living a dream life now, man. I'm like, trade jiu-jitsu every day and just trade my stocks and live and travel. Half the year I live in the tropics, half the year I live up here. But I could have never gotten here right away if I was impatient. And sometimes life, just go with it. You know, don't have like, the worst thing you can do in life is to plan your life out ahead of you. You know, I had a weird path to get where I am now, but I always loved the market. I always loved studying. I always loved CANSLIM style. And, you know, if you're just patient and you put in the work, if you're watching this and you're 25 or 30, 48 is young. It sounds old, but I still have 30 years left of this, and I'm doing what I love, and I got a lot of life experience in between. So don't be in a rush. A lot of people like want to be cool and be like, I trade for a living. Trade on the side. I still, and I'm not embarrassed to say this, I could just live off my trading, but I bartend at my buddy's restaurant in the summer, 5 or 6 months a year, 3 to 4 days a week. And that takes a lot of the stress off of my trading because I live a very simple life. I don't have a lot of expenses. And I like that. Now I can keep all my money in the market and I can grow that capital. So I never have to stress again. You know, I could move to like a country like Bali tomorrow and probably never work again. But I love what I do. I love where I live. I love the life I live. So I don't really care what anyone else thinks. I just want to do what I love every day. And by, you know, doing a side job at night 6 months a year, it takes a lot of stress off my trading. I can live a simple life and not have to pull money from my trading account, not have to like, oh shit, I need money. I need to make money in the market. And you force trades. Right. I think a lot of people just take your time. This is a lifetime process. Who cares if it takes you till 55 to become a millionaire? What if you get really good and at 55, then you can start compounding 20% a year at $1 million? You're a multi-millionaire before you're 60, you know? Most people don't become millionaires till their 50s. That's a fact. And a lot of people, you see some 20-something-year-olds on Twitter, and I'm jealous of them too, you know, they're worth a couple million already. It's like, that's not the reality for most people, you know? You got to just do what you love in life and study, work hard, put in the work, understand that the downtimes are there for a reason. It's part of the process. Love the grind. And if you do the work, it's not rocket science. You got to just lose your ego and put in the work, and you can become successful. And that's what I wanted people to take out of this video, because you see people like Mark Minervini, and I'm like, what the, like, you know, the fact he's up like 175% this year is just mind blowing to me.
Right.
If people just see that and they compare, the guy's been doing it 40, 50 years or whatever, you know, 30. You got to just not care what anyone else is doing and have your own process and do the work and learn from your mistakes. That's all.
Perfect. That's an excellent takeaway. Jay, thanks again for your time. I really appreciate you coming on. Great to talk stocks with you. For everybody watching, thanks for tuning in. If you enjoyed, go ahead and leave a like down below and subscribe if you're new to the channel. And I'll have Jay's links down below to his Twitter. And is there anywhere else that people can reach out to you? Is Twitter the best place?
I used to have a big social media following when I did a lot of plant-based stuff, but I'm really getting away from that. Twitter is the only place I talk stocks. I'm never going to charge a service. I want a simple life. I want to trade my own money. So everything I post is just sharing my journal.
Yeah.
It's not recommendations. It's my process. So please just understand, make everything your own. And I'm just sharing what I love and stuff that I think looks good.
Perfect. We'll end it there. Thanks for watching, everybody, once again, and we'll see you guys in future videos.
Thanks guys.